Hello, everyone. This is Rob Holcomb. I'm an extension educator in ag business management with the University of Minnesota. I'm also an enrolled agent. Welcome to today's webinar or recording of the webinar. Title of the program: Employment of Family Members. Again, this is a re-recording of an event originally held on June 11th. Unfortunately, we had some technical issues, and by redoing the presentation, I'll be better able to clarify several points during the presentation. At the end of the presentation, I will answer all the questions that were put in the Q&A from the January 11th live webinar. Now, after you watch the recording, please feel free to contact me if you have further questions, and I'll be happy to address those at that time. I will be posting my contact information at the end of the presentation. So let's go ahead and get at it here. The some just some housekeeping chores here. This program is actually co-sponsored by both USDA and also ruraltax.org. Ruraltax.org happens to be comprised of the National Farm uh, Income Tax Extension Committee, and of which I happen to be a member of. And ruraltax.org does have a website. It's hosted by Utah State University. It contains a lot of information. I guess I would encourage you to check that out. And there are a number of fact sheets and such that are on the ruraltax.org website. You can get it at be either by the address that you see over there, or the QR code will take you there as well. The standard disclaimer: this program is hosted by USDA, and the key point is that this is offering neither legal or tax advice. It's more educational in nature, and we're just more or less giving you some helpful hints on tax topics in general. And I guess I would encourage you also, check out the farmers.gov website, because there are, we will host monthly meetings with USDA on a variety of topics. I know next month they're addressing the soil fertility deduction that seems to be happening all over the country. This is a slide that I use in a lot of my Minnesota presentations, and just very simply put, I encourage everyone to be a good consumer of professional services. Oftentimes, when you're dealing with income tax issues or business entity issues, it oftentimes turns into there's accountant level stuff and there's attorney level stuff. All right. And I'm always a proponent of, seek out some professional advice on that. Farm tax is a complicated topic. So I never encourage anyone to go out there and buy off the shelf software to do their own tax returns. That I just don't encourage that at all, because that off the shelf software does an interview, but it doesn't ask all the questions that it needs to ask. So again, be a good consumer of professional services. As far as resources go here today, we're going to be drawing information from a number of different locations. Land Grant University Tax Education Foundation, which also the acronym for that is LAGUDF. LAGUDF is a 30-state nonprofit or educational nonprofit that puts out a number of income tax textbooks, and we utilize those textbooks for our University of Minnesota tax courses. Ruraltax.org, you saw that QR code earlier. That site has a number of fact sheets. In fact, I authored a fact sheet titled employment of family members, and that is posted on the ruraltax.org website. And later in the program, I'll give you a little more helpful hints on how to find that. But that fact sheet, it's free for the download, available at ruraltax.org. And some of this information comes from the Internal Revenue website. The When you go to the ruraltax.org website, what I would encourage you to do, get my laser pointer going here. Okay, in the middle of the landing page, there's a section called tax topics, and there's a button, or there's a hyperlink right below that tax topics, more or less where I'm pointing to. If you click on that tax topics hyperlink, it'll take you to a list of the various fact sheets that are found on the ruraltax.org website. If you scroll to the bottom, there is a button at the bottom that you need to hit in order to look at more of them, because there's so many of them that won't all fit on one page. So you do need to hit a button to see all of them. But that's how to access that information, and I would encourage you to go ahead and check that out. All right. Now our topics today, and this is in no particular order, but because employment of family members is a really complicated topic. One of the reasons why we're doing the webinar here today. But we're going to be addressing the employment of children by their parents. Now, I'm mainly focusing on the farming operation in this case, but most of this information is probably applicable to a non-farm business as well. The stuff that's not, I'll try to point that out as we're going through this. We're also going to talk a little bit about spouses working for each other. All right, what are some of the nuances of that? The business structures. I am going to take a little bit of time and talk about some of the more common business structures that we see in the farming industry, and also weave in the issuing of W-2s within those business structures. Right. So that does weave into this discussion. We're going to spend a fair amount of time on reporting and withholding requirements for employment of those family members. And we're also going to talk a little bit about deducting those wages, when we can and when we shouldn't deduct those wages in the farming operation. So let's go ahead and kind of get started here. So as far as the the overview of family labor and farming operations, it's very common. I mean, farming operations, when you look at uh, overall farming operations across the country, they're just intrinsically family oriented. Right. You might have the parents owning the operation, and you might have children working in the operation. You might have siblings that own and operate the operation, and you may have children of the siblings that are working for the operation. Now, the main thing that we're going to focus on here is we're going to be looking at the income tax and regulatory aspects of this, because when you have to put those paychecks together, certain family members are going to be exempt from some of the rules. All right. And there's tax advantages because of those exemptions. So that's why we really want to pay attention to this. All right. And as I mentioned earlier, this is a complicated topic. So navigating the regulations can be a challenging thing, but I go back to that second slide that I showed you, or the slide near the front. Be a good consumer of professional services. I think, when you're doing a farm, if you have a farming operation, I always think that you're doing yourself a disservice if you're trying to do your own return, especially if you have payroll. All right, because the payroll is so terribly complicated. Now, the understanding payroll taxes. All right. Now, these are some things that we're going to be talking about, and this is kind of a summary of the things that we're going to talk about. We're going to summarize the taxes that are applicable to wages that are paid to family members as well as non-family members. All right. We're going to look at the Social Security, Medicare, and federal income tax withholdings that we have to do on paychecks. And we're also going to touch a little bit on federal and state unemployment. Right. Exemptions for certain family members. We're going to spend some time on that as well. Now, in looking at this, this slide I took from one of the other curriculum curricula that I teach at the University of Minnesota is a business structures course, and these are the entities that we discussed during that course. Now, I'm only going to focus on the sole proprietorship, general partnership, LLCs, limited liability company, C&S corporation. We're not going to get into all the entities here, but we're going to just selectively pull some of those out. So it is important to understand, how those entities function, what type of reporting has to happen with the owners in each of those entities. We have to understand that in order to be able to really intelligently talk about the employment of family members. So let's start off with the sole proprietorship. Now, this is by far the most common entity, if you want to call it that. The whole premise of the sole proprietorship is it's a simple thing to set up. Oftentimes, to set it up, oftentimes all the owner has to do is just maybe set up a separate checking account. Sometimes they might have to get an employer ID number, or they might have to do a business registration, depending on your locality, wherever you're at, because those rules will differ state to state. But the point is, the sole proprietorship keeps its own books, right? Sole proprietorship keeps its own books. It files its own tax return. There is no separation between the sole proprietor and the business filings. All right, it gets filed on the individual's 1040. It just may occur on the Schedule F or Schedule C. Now let's clarify something. Schedule F is where farm income and expense is reported on the 1040. All right, it's a separate paper form that goes with the Form 1040. Schedule C is where we report a non-farm business. All right. Now these are unincorporated businesses. If we have incorporated businesses, those are going to get filed on a corporation return and not a 1040. So typically business income is either going to show up on the 1040 as Schedule F if it's farm. It's going to show up as Schedule C if it's non-farm. Right. So the key thing with sole proprietorship is in a sole proprietorship, it's not necessary for the sole proprietorship to issue a W-2 to the owner, right? The owner pays tax based on the profit that the business shows on the Schedule F or Schedule C when we file the tax return. That's what determines the amount of tax that individual is going to pay. The individual does not have to issue him or herself a W-2 as part of that business. They just take money out of the checking account for family living expense or personal expenses, and it's the business income that they pay the tax on. Now, the sole proprietor does need to issue a W-2 to any employees. Now, employees would be somebody that the business owner hires to do work in the business. In our case, it's going to be a farming operation. Now, what we really want to talk about here is wages paid to children. All right, let's hit this right away on the sole proprietorship. Now, wages paid to children, there needs to be a bona fide employer-employee relationship. Now, that means that if you have a dependent child, and when I say dependent child, I'm referring to somebody that would be under 18 years of age that's working in the family farm business. They need to actually be doing the work. All right, there needs to be reasonableness of compensation. I think back, over the course of my career, I can remember several court cases that occurred at the federal level that were addressing abuse of compensation of children. They had children under the age of 5 that were making huge amounts of money. All right, and there were, there were deductions that were occurring at the at the business level for that. All right, so it needs to be, payments actually need to be made, and the compensation needs to be reasonable. Now, there is no rule out there for, how young can you hire a family member for, but I think common sense kind of comes into play there. If you've got a small child, the simple tasks that they're able to be responsible for, or chores, but again, the compensation needs to be reasonable under that, and you do need to issue a W-2 to the kid if they're working on there. Actual payment, we need to do proper documentation, and as long as they're working in the operation for the farming business, it's going to be deductible to the farm as a business deduction, right? But it needs to be, work that they're doing for the actual farming business. The tax treatment of the child, we're going to talk about that here in the next couple of slides. In the farming business, we also have the capability of paying wages in kind. In other words, where I live, I live in Southwest Minnesota. We're heavy corn and soybean production around here with some livestock. The it's not uncommon for a farmer, if a farmer has an employee, they might pay the employee partially in a commodity, like they might give them corn or soybeans as part of their compensation. You can do the same thing with your children, but it all has to be reported, and that's still reportable on a W-2. Now, key point here that we want to hit here on this slide is that if the child is doing personal or household work, say like, they're cleaning the house, or doing something on the personal side that's not business related, those are not business deductions. All right, and that shouldn't be included as a W-2. All right, now we'll get to the other family members on the on a later slide, but just for employment of children, all right, it's got to be that bona fide employer-employee relationship. We look at that reasonableness of compensation, and it has to be for actual work done. All right, now some of the withholdings that we need to review as part of this presentation is, federal withholding, and pretty much it doesn't matter what kind of a situation that you have, whether you're employing a child, whether you're employing a family member, whether you're employing a non-family member, federal withholding is always going to be a requirement, right? And that gets determined by the W-4, which we will talk about a little bit later. FICA and Medicare withholding. All right, anyone that's received a W-2 in the past realizes that there's some boxes on that W-2 that shows total wages, and then there's a FICA withholding and a Medicare withholding. Those two things added up will add up to 15.3% of the wages. Right now, that gets withheld. Half of that is coming from the employee, half of that's coming from the employer. Right, so those withholdings are required in most cases, unless there's that family exemption that we're going to get to here just momentarily. Federal unemployment and state unemployment, that's the FUTA and SUTA that we see here. Now, typically speaking, your agricultural operations are normally going to be exempt from federal and state unemployment. All right, and that's at the federal level. Now, the most common exception that I've seen over my career that is going to kick a farm into having to do federal and state unemployment is if they hit the threshold of $20,000 worth of wages in any calendar quarter. That kicks you into where you have to start doing federal and state unemployment. Now, there are other guidelines, but in my experience, it's $20,000 in a quarter that's gonna catch folks, and that does take a rather sizable operation to hit that threshold. But most, typically the typical farming operation is going to be exempt from federal and state unemployment. So unless you've got that big payroll, you probably are going to be exempt. All right, so let's talk about some of the exemptions that we find under here. So the type of employment that we see here now, folks, this would be under the circumstances of this is going to be one of three things. This is going to be under a sole proprietorship, a partnership, or a single member LLC. All right, which is considered a disregarded entity. All right, if you have a child under the age of 18 that is employed by the parent in a sole proprietorship, you are obligated to withhold federal withholding, but you don't have to do the FICA and the Medicare, and you don't have to do the federal unemployment or state unemployment. All right, those two are exempt. All right, let's move down to the next one. If you have that child, and because see, once that child hits 18, in fact, the month that child hits 18, you need to start doing the FICA withholding. All right, so that that child working for the parent is going to be exempt from FICA if they're under 18. Once they hit 18, you do have to start doing the FICA and Medicare withholding, but you still have an exemption under the federal unemployment. All right. Now, some cases where you might have a parent employed by the child. All right. Say we had a farming partnership with two brothers, and dad still is working for the operation, and he's getting a W-2 for the work that he's doing. The that's a case of where there is going to need to be FICA and Medicare withholding, but under that parental employment, it's going to be exempt from the federal and state unemployment. All right, spouse employed by a spouse. There's really the only exemption for a spouse employed by a spouse is there's going to be exemption for federal and state unemployment, and that's only going to apply if you have that really large operation. But you have to do the withholding for federal withholding. You also have to do the FICA and the Medicare withholding on that as well. All right, so let's recap this just a little bit here before we get too far into this. So that child under 18 employed by the parent. All right, now this works if it's a sole proprietorship, or if it's a partnership and both parents need to be partners. All right, if you've got a partnership and it's mom and dad and Uncle Ed and Aunt June, and if the parents are the only partners, then that kid under 18 is going to have that FICA and Medicare exemption. All right, if it's a partnership that involves all kinds of family members that are more than just mom and dad, there's no exemption for that child that's under 18. All right. Now, the other thing that we want to clarify here, LLCs and corporations. Right, we'll get to discussing those entities just momentarily. The once you get to an LLC or a corporation, or really anything that you had to go to the Secretary of State for filing, that you no longer get that exemption for those kids under 18. Now, the one exception to that is that single member LLC, right? Under the rules, say for instance, if I were farming and I went to the Secretary of State and I create a farming LLC called Holcomb Farms LLC, right? And I'm employing one of my kids that happen to be under 18. They're all over 18 now, but say one of the kids was still under 18. All right, I could do the exemption if I'm a single member LLC, but a single member LLC has to have one owner. All right. And a single member LLC is considered a disregarded entity. It files all of its income and expenses on a Schedule F. If it's a farm. So what I do on my Schedule F, if I'm a single member LLC, is I put down Holcomb Farms, LLC on the name, and I just file it as if I'm a sole proprietor. Under those circumstances, the kids under 18 would get that exemption from FICA and Medicare withholding. All right. Now, once that kid, second bullet here, once that kid hits the, is that 18 to 20-year-old, because remember, once that kid hits 18, the month that they hit 18, we have to start doing the FICA and the Medicare withholding, right? The month that they turn 18. The, for the kids that are that 18 to 20, the, okay, it's employed by the parent. The only thing that we're really exempt from in that particular case is going to be the federal and state income tax. All right. There is, once the kid hits 18, remember, we have to do the FICA and the Medicare withholding. There is really no exemption on that. All right. But we still have the exemptions for the single member LLC, but that's only for the federal and the state unemployment for those kids that are 18 to 20. All right. Parent employed by a child. Again, we looked at that chart previously. Just to recap, we're on the hook for doing federal unemployment. We're on the hook for doing federal withholding, FICA and Medicare. The only thing that you're going to be exempt under those circumstances is going to be the federal and state unemployment. But that's if we are sole proprietor or partnership, with owners being the only, the kids being the only owners, or the single member LLC. Spouse employed by a spouse, there's really no exemptions for that whatsoever. We treat our spouse the same as what we do for any other employee, except there is the exception for the federal and state unemployment. All right. And I mentioned earlier, this is a complicated topic. So, just to recap one more time, we've got exemptions for children under 18 in an unincorporated business, right? So if we have that bona fide LLC, we're on the hook. We have to treat them just like any other employee, right? Federal exemptions for children under 21, if we're that sole proprietor and partnership or single member LLC. The rules for partnerships, employment of children's, it must be, the employment for children, the parents need to be the only partners, right? It can't be a big family partnership with partners other than just mom and dad. All right. If we have siblings or other relatives like aunts, uncles, cousins, we are obligated to treat them no differently than we would any other employee. All right, now let's look at some of the other entities that we have out there, and talk a little bit about some of the mechanical aspects of some of these entities. Now, this is a schematic that I have for a general partnership. Now, under a general partnership, the general partnerships are considered a pass-through entity, meaning that the partnership has its own bank account, it keeps its own books, but it does not pay its own tax. All right. The partnership at the end of the year files its tax return. It's a 1065, which is a U.S. partnership return. And but it doesn't pay tax. When it files the tax return, in a partnership return, when I do a partnership return, my software is going to kick out a K1 for all the partners. Now the K1 are these little arrows that are symbolized in my graph here, right? The K1 gets spit out for every one of the partners, and the partners' share of the profits are reported on those K1s. So it's going to spit out a piece of paper with a K1. It's going to show each partner how much money they have to report on their individual tax return, on their individual 1040. So the way a partnership works is you don't do, partnership doesn't pay tax. The K1s distribute the money to the individual partners, and then they file that K1 income on their individual 1040s, and that's where the tax gets paid. Now, the no taxes paid at the income level, and I've got a note here about the self-employment tax, but that's really not what we're talking about here today. But a partner does not get a W-2 out of a general partnership. right? And that's something that very commonly is mistaken amongst farmers. Is that you don't issue W-2s to partners. The income gets distributed on a K-1. All right. Now you do have the option in a general partnership where you can do a guaranteed payment to partner. Now, in some with some clients that I've had in previous years, I had one situation I could bring up is that we had a multi-brother partnership, and one brother was doing a lot more work than the other two. All right, so what everybody agreed on is the partner that was doing the extra work was going to get an additional payment called a guaranteed payment to partner, and that gets reported on the K-1. You still didn't give that guy, we didn't give that extra partner a W-2. Right, just that guaranteed payment to partner gets reported on the K-1. It's a component of the partnership return. Now, if you've got employees of the operation, right, you could have a family farm partnership. And if you have employees that are working for the farm, those employees are going to get a W-2. All right. Uh, and as far as the exclusion items for children in the operation, same as what the sole proprietor is going to have, except remember the parents need to be the only partners in the farm partnership. Now, let's move on to LLCs. And I talk about LLCs largely because, an LLC, limited liability company, is probably one of the hottest entities out there on the market right now. Between that and S corporations, there's probably more new LLCs and S corporations just about anything else. An LLC in most cases is going to be considered a pass-through entity. All right. If you have more than one owner of the LLC, typically it's going to get filed as a partnership. All right. It's a pass-through. So in most cases, the LLC is going to keep its own books. It's going to file its own tax return. It doesn't pay tax. The LLC doesn't pay tax. The K-1s distribute the money to the individual owners, and then that money gets reported on their individual tax returns. All right. There's no self-employment tax exclusions with an LLC. Self-employment tax is the same as what it would be if they were running three separate sole proprietorships. Right. So that's the key way that LLCs are going to work. Now, the exception to that is you can have a single member LLC that we discussed earlier. That's going to file essentially the same as a sole proprietorship. That farm income and expense is going to be reported on the 1040 on the Schedule F, and we don't have to do the partnership return in the case of a single member LLC. All right. LLC members, owners, excuse me, do not get a W-2. The income gets distributed through a K-1. All right. Similar to the general partnership. The income is going to be done there. Now, the kids do not receive that beneficial treatment. And what we're mainly talking about here is, any of the benefits for the kids under 18, where we didn't have to do the FICA and the Medicare withholding, or for that matter, the being exempt from the federal and state unemployment, that we lose all that once we do an LLC. Right now, but an LLC with multiple partners, the single member LLC still can be treated as a sole proprietorship. Right. But if you have a multi-member LLC, none of the exemptions are going to fly with that. Right. So want to be real clear on that. And I know this is confusing for folks. Okay, one of the other two that I want to talk about here, entity-wise, is the C corporation. Now, as far as the C corporation, typically there's a multitude of different types of corporations out there, folks. But the most common ones that you're going to find is going to be the C corporation and the S corporation. Those are the two that you're going to see in a business application probably the most. Now, they're completely different animals in comparing and contrasting a C and an S corporation. The C corporation, like what we have here, the C corporation is its own living, breathing animal. The C corporation keeps its own books. It pays its own tax. It files its own tax return. All right. So the C corporation pays its own tax. It's not a pass through. Now we see we see arrows with money going to the shareholders, but the way that the money goes to shareholders in a C corporation is typically shareholders in a C corporation are going to get a W-2. They're going to be employees of the corporation. In some cases, we never, well, let me back up a minute. You never want to put land into a C corporation, you know, addressing the farming application. Typically the land is held outside of the C corporation by one of the shareholders or more than one of the shareholders, and the C corporation pays land rent to that individual shareholder. That's another way to get money out of the C corporation. Now that gets reported on a 1099. All right. Or the corporation can issue dividends, which the corporation normally does not want to do because the corporation can't deduct dividends and it's taxable to the recipient. So that's something that we want to avoid if at all possible. So that's the mechanical aspects of the the C corporation. But shareholders in a C corp are typically going to get a W-2 because they're going to get paid a salary. And also, we're going to see money coming out of that for land rent, dividends, all of which will be reported on a 1099. There is no preferential treatment on any type of withholdings. Whether it doesn't matter whether you've got a 15-year-old kid or hiring mom and dad, though the withholding is the same for all employees. There's no preferential treatment on FICA, Medicare withholding, or state or federal unemployment. All right, S corp. Let's look at this is the final entity that I want to talk about here. The S corp is a considered a pass through, and it's got a few nuances. This thing looks similar to a partnership and an LLC, but there's some subtle differences that are different. And the corporation does keep its own set of books and it files its own tax return. But since it's a pass through, it doesn't pay any tax. All right. The earnings get passed on to shareholders through a K1. So this looks an awful lot like a general partnership or an LLC with more than one member. The difference with an S corporation is those earnings that go to the shareholders are not subject to self-employment tax. All right. Now folks go, well, the heck, why isn't everybody an S corporation? Well, here's the catch. All right. Shareholders are required to get paid a salary or wage out of the S corporation. All right. So shareholders have to get a W-2 for have to be paid a salary out of the S corporation. Now, on that W-2, there's going to be FICA and Medicare withholding. That's where the self-employment tax gets paid in an S corporation. All right. So you do have W-2s going to those shareholders out of an S corporation. Now the argument is always what's reasonable compensation for that. There are some IRS guides that this compensation aid that's out here is starting to get some age to it, but I expect that to be updated one of these years. But there is some guidance out there to kind of help us out. But again, just to recap this, profits from the S corp, they're reported to shareholders on a K1. We are required out of an S corporation to give a W-2 to our shareholders. All right. So, but other employees, it's possible for the S corp to have other employees other than shareholders. They don't get any preferential treatment either. And if we're employing family members, there is no preferential treatment for if we had a child that was working in the farming operation under an S corp, there's no exemptions for FICA and Medicare or anything along those lines. All right, let's look here a little bit, going to shift gears just a little bit here. Let's talk about some state and federal regulations that we want to look here. Now, the general concept that we want to talk about here is what is commonly known as, and this is a legal term, most protective standard. Now, when you're comparing federal and state regulations, the employee by law is entitled to whatever is the best deal for them. All right. Now I'll use I'm a Minnesota resident. I'll use a Minnesota example here. Let's take minimum wage for instance. All right, federal minimum wage is $7 and change. I should have looked it up before the webinar, but it's it hasn't changed for years. All right, our state of Minnesota has a state minimum wage, which is much higher than the federal wage. All right, employees are going to be entitled to the higher of the two. All right, same case with overtime. All right, agricultural labor, by and large, at a federal level, is exempt from overtime. However, the state of Minnesota, where I live, does have an overtime law. Anything over 48 hours in the state of Minnesota, we've got to pay overtime on. So when we look at those most protective standards, you need to look at both the federal and the state, and whichever's the better deal for the employee, that's what you have to provide. All right. And it depends on folks, it just depends on where you live. All right. You need to you have to do a little bit of homework on that. I can't cover all 50 states. So you just need to check on that. So you need to check with those agencies and move on with that. Okay, becoming an employer. Let's hit some of these things. Now, your employer responsibilities, and yes, this is, we still are talking about employment of family members, but when you're issuing W-2s, this stuff has to happen even if you're only employing family members. When you're doing W-2s, we also have to pay attention to those withholding payroll taxes. You're typically going to have to get an employer identification number. Now that's at the federal level. Now, going back to that, be a good consumer of professional services. Get a hold of your tax professional for help with that. It getting an EIN is really quite simple. I could probably put one together for a client in 20 minutes or less, that's going to part of that's going to be collecting the information I need in order to do that. Now, you're likely going to have some state registration requirements, but that's going to depend on where you live again. All right, and if you're doing payroll, you're doing W-2s. The EIN is what's used to transmit that to the federal side. You may end up getting a state level equivalent of an EIN, or there be some type of a identification number with your state payroll agency. But again, that depends on where you live. So on the child labor laws. Now, this could be an hour-long presentation all by itself, but typically at the federal level, there's going to be parental exemptions from child labor laws. So if you're employing your own kids, you typically don't have to, just looking at things from a federal standpoint, you typically don't have to adhere to the federal child law standards because there's exemptions for, if you're hiring your own kids. Now, the cautionary note I have there is you also need to check with your state because again, coming back to that most protective standard, if the state has tighter regulations than what the federal has, you got to abide by the state. So I can't just give you permission to go forth and conquer on this because you need to check with your local state regs. All right, each state may have a different set of regs, and that's part of what makes employment tax and employment reporting kind of complicated. All right. Now, when you're hiring non-dependent children, all right, say for instance, if I'm hiring, say for instance, I'm farming and I happen to have hired my daughter when she was in high school, and I also hired some of her friends to maybe go out and pick up rocks or maybe help with harvest or something along those lines. uh, those non-dependent children are need to be treated exactly the same as any other employee. There's no, there's no exemptions under withholdings or anything for those non-dependent children. But what we do need to look at, though, is we need to look at those federal and state rules, and we also need to look at that most protective standard because, especially under these child labor laws, this, a lot of times the child labor laws are going to dictate that, the child can't work before a certain time. There's usually paper route exceptions written into the law. They might not be able to work after a certain time on school nights. They are probably going to have a limitation at certain ages of the total number of hours that they can work. So, you need to check those things. And again, most protective standard between the state and federal. And again, I think this is one of those areas where I think it's a very good idea. Consult with a tax professional that does payroll. Make sure that you're covering all your bases on that. All right, documentation. Let's talk a little bit about documentation. Again, this, we're still talking employment of family members, but this is really, really important, folks. Now, I have been doing tax and analysis stuff since 1990. I guess I started out as a high school ag teacher and, did that for 6 years. And then I've pretty much been doing the tax and analysis since then. Now, a couple things that we need to look at here. The Form I-9, right? Now, the Form I-9 is that's a form that's put out by Homeland Security. It is an employment eligibility verification form. The I-9 is something that you need to have completed by every single employee that you have, no exceptions. All right, family members, non-family members, it doesn't matter. If they're getting a W-2, you need to have an I-9. All right, we also need to get everybody to fill out a W-4. All right, now a W-4 is a federal form. Well, there's a federal W-4 and you probably have a state level W-4 depending on where you live. But the federal W-4, the purpose of that is to communicate. Take a deep breath here. The purpose of the W-4 is for the employee to communicate to the employer how much federal income tax to withhold from the paycheck. That's the whole purpose of the W-4. All right. And these are going to occur in, definitely the federal level, depending on the state that you're in. Like, again, I'm in Minnesota. There's a federal W-4 and Minnesota has a state W-4 as well. And in Minnesota, we got to fill them both out. All right. There's no exceptions. All right. So, there's no exception for doing those forms for family members. Now, let's look at this I-9 first of all. All right. Now, the I-9 is something that again, there's no exception for family members. We need to have this thing completed inside of 3 days of hiring. Now, what you do is on day one that the employee shows up, you give them a copy of the form. They fill out section 1, which is the name, address, all the personal information and everything. And there's the employee needs to bring in part of the I-9 gives a list of documents. There's an assortment of documents that they need to bring in to show you in order to complete the form and verify their employment eligibility. Now, that needs to be done inside of the 3 days, and we're going to look at all the pages of the form here just momentarily. So just hold on. The folks, you don't send the I-9 in. You retain the I-9 in your permanent records, and in the this era of identity theft and everything, it's a good idea to put these things someplace where you can lock them. All right, but you retain those in your permanent file, your permanent files. All right, you keep these. You don't mail them into Department of Labor or anything like that. Now, The I-9 is an easy form to download. You download that thing as a PDF, and there's the link. And in fact, in the PowerPoint that that's going to be available for download with this, you can just click that link, and that'll take you right there. Now, uh, the current I-9 now, as of, I guess I'm recording this on June 13th of 2025. Now, as of today, the current version is of I-9 is dated August 1, 2023. Now it expires in 2027. Now, folks, if you've got current employees on, that are working for you that may have filled out an I-9 for, was maybe a version older than that, you don't have to replace those. I mean, you fill it out as of the day that they were hired, and if you happen to have an older version because somebody's worked for you for 10 years, no big deal. You don't just because a new version came out, you don't have to update the ones that were already completed. I mean, just leave those in the folder. It's, the one to use, you want to use the current version that's available for somebody the day that they're hired. All right. So after 2027, there'll be a newer version that we'll have to use for anybody that you hire after May 31st, 2027. So I think this is one of the most helpful things on I-9s that I could tell you. This link here takes you to it's actually it used to be called Publication 274, and but what it doesn't, it used to be a downloadable PDF. Now it's just a website that just exists online. But it is this Form 274. It takes you line by line through the I-9. All right, it says line 1, here's what needs to go here. Line 2, here's what needs to go there. It also gives sample pictures of some of the different types of documentation that you might see. For instance, it's got copies of green cards and visa, work visas and everything, which some folks I've never seen those things before. So if you get presented with that, it's very helpful to look at that, and you can see what those documents are going to look like. Now, good to take just a couple minutes here and go over the I-9, and because this is oh so important. Okay, the day that the employee shows up, right? The first day of work, hand them the I-9, and they need to complete section 1, which if you look there, that's primarily name, address, if they have a social security number, indicate their citizen status, and they need to go ahead and sign that, but they complete section 1 on day 1. Now, section 2, which is the bottom of that page, there's a number of different areas. Here's where you gotta list the type of document that they showed up with. All right, because what you're going to do is page 2 of this thing gives a list of acceptable documents for the I-9. And if what in we are, as employers, we cannot tell the employee what to bring us. It's up to the employee to bring this stuff in. Right? It's entirely up to the employee. If they bring something on List A establishes both identity and employment authorization. So if somebody brings me a passport, what I do, the passport, if they bring me something on List A, we're done. We're done. I just go back here to this. I list passport here, fill in the information about the passport. We complete the bottom, and we're done. Right. Now, another common example that you might see for employees that may walk in the door is a combination of a driver's license and a social security number. You'll notice that those are the top items on list B and C. All right. If you get something on list B, you've also got to have something off list C. All right. So if in that case, we'd come back here and we'd put the driver's license here, we'd put the social security card here, fill out the bottom, and again, we're done. All right. Now, there just a couple concluding remarks on here. There is a Spanish version of this. Now the folks, I guess the current rules that I've looked at on this is that the English version is the one that needs to be completed and filled out and kept on file, but there is a Spanish version that you can use for interpretive purposes. And there's also, I think, a box on there that you check if somebody was interpreting, if somebody was working as an interpreter in completion of that, that person needs to sign the form as well. But see that guidebook that I had the link for. That is extremely helpful. But folks, the I-9, you have got to have those things on file. I mean, there are penalties for not having that I-9 done. All right. And folks are going, well, I have to do it for my family members. You know, if I hire my kid, yes, you do. I mean, those are the rules. All right. You know, just take take 10 minutes to do the thing and then you can sleep good at night. I mean, just, you know, that's something that you just need to do. Okay, let's talk a little bit about the W-4. Now the W-4 is again, this is a form that the employee needs to complete. What this is this is communicating how much federal income tax to withhold on the employee's paycheck. All right. The form can be downloaded at the link that you see on the slide here. And you know, I'm not going to take you line by line through this thing. They did revise this form 3 or 4 years ago, I suppose. It could be longer. I mean, maybe it's been longer, but you know, they just, you know, complete the name, address, filing status in, you know, for the individual at the top, and they more or less just answer the questions moving through the form. You know, it's going to ask whether they have another job, and you know, they just need to go through and answer the questions, sign the thing, and then that's going to give you the information that you need to complete that you know, to complete those paychecks accurately. Now, something else, and this is also something that even if you employ family members, including kids, this is something that you're required to do. This is a federally mandated program starting going back to 2012. All right, so this has been around for a while, but it's a new hire report. Now, this is administered through each individual state. So you need to go to, you know, if you wherever you live, you need to, you know, either talk to your accountant or you know, go to your state Department of Revenue and search up new hire report. But they'll have a section where you probably have to create an account. But what you do is when you hire a new employee, you report their name and their various information, and you know, what you do is you report when they started work. Right. Now, the whole purpose of this is to chase down individuals that are delinquent on child support payments. I mean, that was the main idea behind doing this. Uh, one, excuse me, just I had a thought for a moment, but I think we'll move on here. The other thing that we want to touch on here real quick is workers' comp, and again, employment of family members. This is a critical piece to that, especially if you got a family farm operation. Now, workers' comp insurance is it's administered through your local state, and it's insurance that's designed to provide wage replacement and compensation for employees that might suffer work-related injuries or illness. Right, I know I'm reading off the slide for that, but each state has their own system, but there are a lot of exceptions to the need to cover workers' comp. There's a lot of exceptions for agriculture. Right. So again, this is something, be aware of it. But you know, what I recommend is you need to check your state rules to see whether you're obligated for that or not. Now in Minnesota, you know, if it's a family farm operation and you're carrying, you know, the state specifies the amount of liability and healthcare coverage that you got to cover, you know, and if you meet all those guidelines, you can get out of having to carry workers' comp insurance, right? But if you're employing non-farm members or non-family members, you're very likely going to end up having to having to pick that up. So, be aware of that. Another reason to be a good consumer of professional services. Now, on the workers' comp side, if you're operating a farm family business, it's I really encourage everybody to have a conversation with your insurance agent. If you've got a farm consultant or your accountant, sit down with those folks and really analyze what this is going to cost, and the cost and benefit analysis on that. I think that's really a good idea to take a good look at that. Now, because again, I've been in this business for a long time. I've seen farms that for years producers would approach me and say, "Well, we're going to do anything we can to get out of this workers' comp," and I've had some cases where clients you know, had an employee that fell off a grain bin and had a catastrophic injury and everything. Fortunately, they were carrying it, and that probably kept the farm from going broke. So, just be aware that accidents happen. Agriculture is kind of a dangerous occupation. So, that could be just a risk management piece that you need to think about there. All right. Kind of wrapping everything or pulling everything together here in the PowerPoint that you can access. The presentation is a PDF that you can download. There's a list of all my resources. If you want to go and access any of that stuff, that's going to be there. And now we come time to I'm going to do some Q&A. I'm going to take care of the question and answer session on this thing. And while I'm doing the Q&A, I'm going to put my contact information up here. As I mentioned earlier, everybody, the I've been an enrolled agent for 20 years. I'm also the director of the Minnesota tax schools. So I'm not going to say I've seen everything, but I've seen a lot. So, if you have some follow-up questions on that, by all means, I have a 100% extension appointment. Outreach is part of my job. So, the only thing I would encourage you is, if you do have a question, I would encourage you to reach out to me, probably via email first. I do a lot of teaching over the course of the summer. Plus, I'm involved in several conferences, both attending and teaching over the course of the summer. So, but email catches up with me everywhere. So let's look at the Q&A here. And what I'm doing is I'm pulling up the Q&A from earlier this week on the 11th. Question was, what's the youngest age it's okay to pay your children to work on the farm? And now, folks, there really is no answer to that. The uh, as soon as if the earlier in the presentation, we mentioned that we needed to be paying for actual work done. All right. So as soon as that child is old enough to carry out those duties and fulfill those responsibilities and do the work that you're paying them for, it's probably okay. Now, there is no magic age, but is it perfectly feasible to pay a 10-year-old for helping out with farming activities? Absolutely. They just need to be doing the work. Um, Question was also posed as to confirm where that fact sheet can be found, because there is a fact sheet that I authored called Employment of Family Members, and that does take a little different twist on clarifying when to do the FICA and Medicare withholding and when not. Again, that's at the ruraltax.org website. There's a hot link there for tax topics, and it's kind of in the middle of the page. You scroll down that list, the employment of family members is actually on the second page of that. There's a button at the bottom that you have to hit to see more, and that'll show those for you. Other question that we had from the 11th was, can you treat family members as an extension of your own labor? And the answer to that is, uh, Well, in order to do that, you're just basically not reporting the labor. You're just, the family members are contributing, but you're not doing anything to report. Nothing's probably going to happen from a practical standpoint on that. But the thing I want to point out is that if you have family members that are working in the farming operation and they're actually doing work, if you compensate them, that's going to be a business deduction. So if you've got family members that are working in the operation, I think it's to your advantage to go ahead and issue a W-2 and treat that as a business expense. All right. Next question. Does the FICA exemption apply if a single member LLC is taxed as a partnership election? All right. Now, I think that this is one where I think the person doesn't quite understand how LLCs work. Now I mentioned earlier, the single member LLC is an LLC that only has one member, and it's considered a disregarded entity, and that by default, IRS wants that filed on a Schedule F. If it's a farming operation on the 1040, if you have a single member LLC, it should not be filing a partnership return. You could, it would just be kicking out 1K1, but you'll probably get a letter from IRS saying that that's not the way you're supposed to do it. So I think in this case, the individual probably didn't understand how the filings and everything are going to work. In the case of the single member LLC, there is a FICA exemption for the kids that are under 18. All right. But if you have the multi-member LLC, that exemption is not going to exist anymore. All right. Next question I had, we had somebody that asked about a social purpose uh, corporation, because I had mentioned earlier S corporation, C corporation. Now, a social purpose corporation is a relatively new entity that's out there. It's really designed to pursue both business and social, maybe charitable activities. The point about that is if you have one of these type of corporations, they are not eligible to be considered a nonprofit. Let me say that again. Social social purpose corporations are not cannot be considered to be a nonprofit. All right. They're actually chartered as a corporation, but there's usually a social aspect to them. Uh, will this webinar be available to watch later? Yes, this will be posted on farmers.gov website, and you can access it there. I would anticipate probably takes them a couple weeks to get everything processed. Um, do the child exemptions for FICA apply to single member LLCs? Yes. Yes. You can treat that the same as if it were a sole proprietorship. All right. Other question that we saw here. If an S corporation has no net income and no funds to pay shareholder salary, does the S corporation have to give shareholders a W-2? Answer is they should. Even if it's going to cause a loss, I think it's important to issue that W-2. It may just be a small amount, but you really don't want to skip that W-2 process with that. And that's something I'm going to defer that probably to your accountant. That's something that you probably need to take up with your accountant. Do shareholders in corporations have to do I-9s? Yes. All right, because they are employees and there are no exceptions for that I-9. So yes, you want to have that thing on file there. Will I need to track hours if I hire my child under 18 as a flat salaried worker? Well, if you have a salaried worker and you're paying your child under 18 a salary, no, you technically don't have to track those hours, but I would still do a good job of documenting what they're doing in case anything ever comes up. Because remember, one of those guidelines for employing kids is that they need to be doing actual work. So I would be doing some type of documentation for that. Next question. If I hire my 11-year-old daughter and pay her as an employee, do I lose her as a dependent? And the answer to that is no. You can still claim her as a dependent, it just depends on how much money that she makes. She may not even have a filing requirement. But no, you're not going to, that's not going to cause you to lose her as a dependent on your personal return. The other person, next question, it was asking about hobby farming. All right, and now that's not exactly what we were doing in this particular case, but uh, in the case of hobby farming, the what I would probably steer you towards, that whole discussion on hobby farming, is whether or not an actual trader business exists. Because one thing that tax professionals that we see a lot of is we may get somebody walking in the door that they have a real good paying W-2 job, and what they do is they bought themselves an acreage and they've got a couple cows and some chickens, and all of a sudden they bring all the stuff into the accountant, and they try to file a Schedule F, and it's losing like $30,000 or $40,000. All right, now that is not going to fly. That just doesn't fly. And what they're doing is they're trying to create a farm loss to offset their W-2 income. So IRS at the on the IRS website, what I would recommend in that case, if you want to check that out, go to the IRS website, and then there's a search box there. Search up hobby versus business. All right, and there it's going to pull up a list of criteria that IRS uses to determine whether or not something is a bona fide business or whether it's a hobby. And because if it's a hobby, you're not allowed to take any of the deductions. All the income's taxable, but you're not allowed to take any deductions for it. So that's what's happening with that. Let's see. Um, Okay, does it matter how many hours worked or dollar amounts earned? You still have to do a W-4 I-9 for the dollar amount paid. And I think I know where this individual's going with this question. If you've got somebody that's an employee, you need to have the I-9, even if they're drawing a small amount of money. Wage wise, if they're an employee, you want to have that I-9 and W-4 on hand. Single member LLC and expenses all paid in cash, no employees, all the labor is being performed by me and my spouse. All right, so I think what this individual was going for is uh, whether or not to do a W-2 for the spouse, because again, single member LLC means one owner. Right? If you've got a spouse that's working in the operation, you're certainly entitled to give the spouse a W-2. All right. In fact, I would encourage a client to do that very same thing. Coming back, here's one. We've got a couple more of these left here. Does the hobby income standard look at earnings before interest, taxes, depreciation, and amortization, which is abbreviated EBITDA? All right, which is a financial analysis piece on there. No, in determining hobby farming, we really don't look at EBITDA, TDA. What we're looking at there is primarily those criteria that are on the IRS website. And again, I would encourage you to go to the IRS website and Google that hobby versus business, and it's going to pull up all the criteria that you need to look at on that. Final question here that I want to touch on here. Are there different tax rules between temporary and seasonal workers? Really not. As far as, any of the withholdings or anything that we're talking about here, between temporary and seasonal workers, there's really no difference. Now, the only thing that I would advise is that there are different rules if you are hiring H-2A foreign workers. Right, that's H-2A is a government program where I can bring in most of the workers are brought in for seasonal work. A lot of them are brought in from Mexico, Central and South America, but that's a government sponsored foreign worker program. There are special withholding rules under that, but I would steer you towards that website on the the IRS has specific information posted on their website relating to the payment of H-2A workers. So that kind of wraps up all of the Q&A for the piece here. And we've been doing the questions again, folks. Here's my contact information. And again, I mentioned earlier, especially this time of the year during the summer months, I am going to be doing a lot of traveling. Email catches up with me everywhere. So I would encourage you, if you have questions, shoot me an email. I'll get back with you as soon as I possibly can. And with that, folks, I'm going to go ahead and sign off. Thank you for joining the recording, and I wish you a pleasant day. Thank you.